Welcome, accounting students, to your final assignment. Yay! Congratulations for making it to the last assignment of this term. Let's take a look at it. It is kind of a lot of work, just kind of a big grand finale for you. So let's take a look and figure it out. Okay, so with this part one, we are going back to good old journaling and journaling these transactions. Now we're talking about journaling transactions, though, when we're looking at payroll and our tax payable accounts. So if I'm saying tax payable, that should give you a clue that these are liability accounts. Okay, this is money we owe for taxes as an employer. Okay, this is think of you as the employer when you're looking at these transactions. So we are journaling our transactions for paying in taxes, and the first one I've actually put in for you. So on the date, these are all going to fall under August 30th, so we can just put the date once here and then list our transactions. So we have salary expense being debited for $13,452.90. Okay, that's basically what our salary expense is just the expenses of paying a salary, not the actual salary itself, just all the taxes that go into paying that salary. So our next journal transaction, and I put in a little reminder here for you, if we're increasing these liability accounts, that's going to be recorded as a credit. So keep that in mind. So the next transaction we're recording, and I'm going to tab in just a little bit because that's how we record in our journal, right? Good. So our next one is going to be employers' federal income tax payable. And that amount is $258. So I record that 30 cents over here in my credit column. And I don't like my, I'm really kind of OCD when it comes to the organization of my tables. And I don't like to have little, I want everything to fall on one line is what I'm trying to say. So when this line folds over, that really just irritates me. Okay, good. Got it. So you can adjust your tables as you want. Maybe you're not all as picky as I am, but I just like to have a lot of space so that my lines don't double over. Okay, that's enough of that. My next transaction then is going to be employees' state income tax payable, because we match it as an employer, and that amount is going to be $27.50, and you get the idea, right? So we're just copying in the rest of these transactions, and the last one tells you we are crediting our cash in bank, so we are deducting cash in bank for $1,075.69. So finish out your journaling of transactions in this part one. Pretty simple. Okay, with part two of this assignment, we are looking at this payroll register for our information. Okay, so this is a register of what we paid employees that work for us. So picture yourself, we are the employer, and we are going to actually figure out what we as the employer have to pay in for taxes. So this is the information we're working with, and I actually have this table open on another screen, so I'm not going to be scrolling back and forth and make you guys motion sickness. So that might be a good idea for you too, just to have it open on another screen, so you don't have to worry about it. Okay, so we're journalizing the employer payroll taxes for the above transactions that are documented on our payroll register. So we are going back to the old-fashioned analysis and T accounts. I know you're probably sick of this by now, but and you feel like you're already pretty good with your T accounts and everything, but we haven't worked with these accounts before, so I just want to make sure that you understand the debit and credit and increase decrease side of these types of accounts. And it's actually pretty easy, but I just want you guys to refresh with these T accounts for these transactions. So first, let's do our analysis, and we're identifying the accounts that are involved. We're using a payroll tax expense account, so that word expense should tell you something about that account. We have a Social Security tax payable, Medicare tax payable. That tax payable should tell you something about these accounts. If it's a payable and we owe, what does that tell us? Then we also have state unemployment tax payable and federal unemployment tax payable. And the reason I have these highlighted is because you don't see them on this payroll register up here, just because this is like your employee view, and we have to figure out what we owe for our unemployment taxes as an employer, if that makes sense. So, and I actually give you your rates right here, so I'm going to go ahead and just figure out what my amounts are going to be based on these rates, so because I'm going to need that information when I go to fill out my T accounts. So what I'm going to do is we take our unemployment rates based off of what our total earnings is. So we have a total earnings of $1,350.25. I'm going to take that times my 0.08%, which you guys, you know your math conversions well. This gives me a 0.008. And let's just pull up the calculator real quick to see what that would be. I'm paying in $10.80 into my state unemployment tax payable account. And then to figure out my federal unemployment tax, I'm taking that same $1,350.25 times 0.054 to give me, flip that good old calc, $72.91. And so now I know I already just had that figured out, what I'll be paying into each of those accounts. So then when I go down here to clarify my accounts, this is basically you're going to tell me what types of accounts these are. So payroll tax expense, that tells us it's an expense account. We have Social Security tax payable. When we see the term payable, that tells us it's a liability account. Okay, so clarify those accounts and tell me what each of these accounts are. And then you're going to tell me the effect that these transactions have on each account. So we are paying into tax expenses and paying into our tax payables. So all of these, so what does that tell us about all of these accounts and how they're being affected? Are they increasing or decreasing? And then tell me about the debit rule, and with which account is being debited. Here's a clue. There's only one account being debited, and the rest of them are being credited. So there is a clue for your debit and credit rules. You're welcome. And then I left in, I made your T accounts for you and left the names of the accounts in there. So you need to tell me what the debit and credit, how the debit and credit sides are increasing or decreasing. And since this is my payroll tax expense account, I know it's an expense account, so I'm going to increase on the debit side and decrease on the credit side. And you need to tell me what these liability accounts, how they will increase and decrease, and then also the amounts that each will increase and decrease. So we have our payroll tax expense increasing for $187.01. Okay, and then we're going to go down here to our journal entries, and I have done the first one for you. And there's my phone ringing in the background. So I have my debit listed first, and then I'm going to list all of my credits following this one. So just to do the first one for you, we are our Social Security tax payable, and this amount will be credited for $83.72. Okay, and then you can fill out the rest of them and make sure that when you are done, that the amount of your debit here equals the amount of your list of credits. Okay, and that is it for part 2. So moving down to our final part 3, so now we're kind of looking at, all right, we just posted to our tax payable accounts. We're kind of basing it off of what we just did up here in part 2, and now we're doing the next step in part 3, just with different transactions. So we have our, these are tax liabilities, we're paying them this time. We're not just recording the transactions, we are paying them off. And keep in mind we have this, we're using check number 207. So don't forget about that when we go to make our journal entries. Same type of thing. Here you're going to analyze these accounts. These are the ones we're working with. So I want to know what types of accounts each of these are, and then the effect that it will have on each of these accounts, whether they will be increased or decreased, and then which account the debit rule applies to, which accounts the debit rule applies to, and which accounts the credit rule will apply to. And same thing here with I need you to fill out these T account tables and then copy your transactions into the journal. Okay, so I left, oh, look at that. I was even nice enough to leave the check number reference in here for you. So again, you're welcome. And I just need you to list then the accounts that are being debited. And then there is one more step added to this part 3. And that is posting to the good old ledger accounts. So with these ledger accounts, we're just working with the 3 tax payable accounts. And you are telling me, basically we want these accounts to zero out. So here's your beginning balance for when we paid into them. And now that we're making the payment, you're going to tell me if we are debiting or crediting the account, and what our ending balance should be. Okay, so that's all there is to it for part 3, and that sums up the rest of this assignment. If you get confused or need maybe a refresher on T accounts or debit and credit rules, please go back and review maybe some of your old assignments or the debit credit video that I have posted in the announcements, and really check out your resources, okay? Or you can always email or call me if you have questions as well. So good luck, and I will be anxiously awaiting to see if you have any questions.